Many of you, I presume, is on this webinar because you're interested in equities and also the share market. So how many of you are just starting out on your journey to building wealth? That's one group of people I'm speaking to today. And the other group is how many of you are already in the market but looking for some direction? And I think that's my little subtitle here is where to from here. Over the last 2-3 weeks, we've been talking about, we did a review of 2015. Last week, we spoke about going forward into the year now. But my objective today is to show you how PSG Wealth can help you. Show you the research tools available, number one. And some of you might also want to be in a situation where you want to speak to someone. So we do have this thing called the private trader. We've got 2 traders on our trading desk that's there to help you. Obviously, we can't give you specific advice. The idea is to look at the presentation today and look at some ideas, and then you phone through to the trading desk to Tian Heidenrich and Amant Beer. They're there to help you. Just give you that peace of mind with your share selection. And that is, as I say, one of my objectives with today's webinar. But we'll be discussing the top 10 large cap stocks and the top 10 small cap stocks, just to give you idea of the stocks we're looking at, obviously the quality and also the processes behind it. So everybody starts off with a watch list by using various share selection criteria. Our objective is to create a short list of potential winners. And the idea from that is to end up with a diversified share portfolio that will include companies that are great quality on the one hand, but also, very importantly, that you pay a good price for them. So that is in a nutshell my objectives with this webinar today. So just quickly my agenda. If you had a look at it, I'm going to go very quickly over PSG Wealth's investment philosophy. You know, 2016 looks likely to be another tough year for South Africa. And we spoke about it last week. Obviously, a lot of uncertainty, and uncertainty creates that volatility. And I'll be touching that in my conclusion. So obviously, another tough year with weak economic growth, high inflation, high interest rates, and obviously also lower discretionary consumer spending. So that's in that context. The rand is likely to remain vulnerable, obviously, to further depreciation, and that will also impact. That's also being impacted by weakness in the economy, low commodity prices, obviously increasing risk of losing our investment status. So we've mentioned all this before in our previous webinars. I'll just bring it into this webinar for those of you that have missed out the previous ones. The US dollar is also expected to continue strengthening, and obviously that will have an impact on emerging market currencies, and obviously ultimately to South Africa. So despite all this uncertainty, the local investor is not without any options. So without options as such. Investor, you may not control market returns on the one hand, or you might not control economic fundamentals, but you do have an influence over the quality of the shares in your portfolio, number one, and number two, the prices that you are prepared to pay for that risk that you're assuming. So those are the 2 things that you want to take in consideration when we go into this presentation. Additionally, you can also diversify your assets across asset classes. So it's not only obviously the equity market, the bond market, property, etc. But also you can also look at international markets, and all these things help you reduce your portfolio risk further. In addition, we also believe, and we'll talk about it in more detail just now, a concentrated position in the right sector. We'll be doing a bit of a sector review just now. And that will also be very important, as important as last year. So this combined with a realistic long-term view, long-term perspective, should ensure that your investment strategy will be likely to succeed. So that is the content of the presentation today. So as I mentioned just now, you might be a novice investor. You might be looking for direction in these volatile markets, uncertain markets. How do you get started? So we'll be touching on that, but also obviously going into a bit more of our investment philosophy. If you're an intermediate investor, You might have a strategy already. So I'm still going to touch on that investment philosophy, or maybe tweak it and develop your own. But also, obviously, you're looking for call it hot tips, and we want to highlight some opportunities for you. Okay, so let's get into the investment philosophy. Just some background quickly. Research was conducted over a 40-year period between 1954 and 1994 on 25 top stocks on Wall Street. And the idea was to establish which quantitative measures, which metrics will produce the best return. If you had to take $10,000 and rebalance that annually, and you leave that to compound year in, year out over a period of time. So we always talk about different financial ratios. We're talking about measures or metrics. And the idea was that they found out over the 40-year period that the average was about 12%, 12.4%. There's the average of the market, 12.4%, resulting in $10,000 becoming roughly about $1 million. Over that 40-year period. So it's not too bad. But saying that, we found that there are certain financial ratios that underperformed the market. So that's the average of the market. Let me just get my little spotlight here. That's the average of the market. And you see all these ratios there to the right. Low PE ratio, high dividend yield, high 5-year earnings per share gain, high PE ratios, high price NAV, high price to free cash flow, high price to sales, and low 1-year relative strength. Those are the financial ratios that underperformed. We all want to look at the ones that outperformed. In other words, measures that outperformed the benchmark included a low price to free cash flow, the high relative strength, what else was there? Low price NAV, low price sales. So all these measures compounded gave between a 14 and a 16% return, which resulted in your $10,000 becoming between 1.6 million and 3.2 million. So our focus, our research at PSG Wealth, let me just get rid of this cursor again, is to focus on those ratios that will give you the most. So in the next slide, you'll see that we focus on these three from a valuation point of view: low price to sales relative to normalized margins, low price NAV ratio relative to a sustainable return on equity, and low price earnings multiple or PE ratio relative to a sustainable growth rate. But using that now, obviously, this will result in a share selection being contrarian in nature. And you'll see some of my selection just now what I mean by contrarian. When everyone else is selling, you want to be buying, and everyone else is buying, you want to be selling. So the first step towards building a successful investment strategy is to have a look at what has been successful in the past, and then using that approach as a starting point, we build on that. So we scan the market based on these criteria. So out of the 450 stocks, as I say, you want to make a smaller list, and these are the list of shares you're going to add onto your watch list, and then obviously tweak it from there. So we're not only looking for stocks with low PE, also sometimes we're looking for companies that its business fundamentals indicate that it's been unduly punished, and we'll be talking into more details just now. So, as I say, the whole idea is that this criteria, sometimes you'll find that we're highlighting out of favor stocks. So the stocks have fallen, the rest of the market is not looking at. These are not the hot stocks, but they offer value. And that's the whole premise of the presentation today. By the way, I hope, just before I go on, fast examples, let me just... Okay, I just want to see, can you guys all see my slides? I'm just worried you guys don't see my slides, and we've had these little technical glitches in the past. Just type in the question box. Okay, looks like you guys are okay there. Okay, so the idea is that, let's look at the big picture first. So in the next slide, you'll see this is the JSE All Share Over. This is the barometer of all the shares on the JSE All Share. I'm going right back to the start of our latest, our most recent bull market, way back in 2008, 2009. And you can see where we are now. So we've had this nice little run, a 7-8 year run. Well, there are some people that are skeptical that we might be in for a crash, or the politically correct term now is a healthy correction. So what are they basing that on? They're thinking they're looking at PE ratios, and they're thinking our market is expensive. You can say we run about 20. We haven't been here for a long time. Between 19 and 20 on a price earnings multiple, yes, we might be considered expensive. But remember, that's been distorted by the big heavyweight rand hedge stocks, the SA Breweries, the British American, Tobacco, Richemont, what's the other one? Naspers. Those companies have high PE ratios and obviously distorts the whole market. And we'll talk about it just now when we chunk into the individual sectors. There are opportunities. So yes, if you look at the first impression, high PE ratios, the inverse of that will be a low earnings yield, and you can see the average dividend yield. Okay, so just be understanding that the JSE, if I had to do a quick review of 2015 again, the JSE All Share returned a muted, call it 5% total return. It was a lot influenced by the rand hedge counters I mentioned just now. Obviously, the rand depreciated a lot. So the companies like Breweries, Richemont, Naspers, and British American Tobacco had a big influence on the market. But also remember, those four stocks contribute about 38% of the index value. Okay, and they derive most of the earnings outside of South Africa. Yeah, so 84% of the Aussie constituents, 84% underperformed the average of the market. So that just highlights the impact of those rand hedge stocks on the total returns. Okay, so here's a quick quote from Peter Lynch. When stocks are attractive, you buy them. Okay, and that's what we are as value investors. We bargain hunters. Sure, they can go lower, and I know a lot of people are in that situation, a bit of a value trap. So Peter Lynch was a big fund manager for Fidelity for many, many years. Very successful. Let me just take it out of the way. It looks like we've reached full house. Okay, so from now on, can't accommodate anybody on our webinar anymore. We're full house. So I bought stocks at 12 Rand that went down to, let me just take us out of the way, it keeps on popping up. Okay, went down to 2 Rand, but they later recovered back to 230 Rand. You just don't know when you can find the bottom. So this introduces my approach to the market. You can look at fundamentals, what to buy, but also a firm believer in when to buy and when to sell. So fundamentals and technical approach, we use them together. And so we can use certain criteria. So on the one hand, I'm looking for three things. I'm looking for stocks that are undervalued, that are profitable, with manageable risk. Okay. On the other side of the coin, from a technical point of view, I'm looking for stocks that are ideally trending up. That might be a bottom of a cycle that's oversold, but they're still outperforming the market. So these are the ideal situation. The metrics as such, I'm looking for, remember we're talking about a PE ratio about 19 on the market. So anything lower than the average of the market on the one hand. We prefer looking at the PEG ratio, anything below 75, anything below on price NAV below 2. So this helps you screen the market from a valuation point of view. We look at profitability, our criteria there, return on equity greater than 15%. So, and that ties in with the price NAV. The higher the price NAV, the higher the return on equity. They work hand in hand. And then from a risk point of view, I'm looking for cash flow, first of all. Greater than 0.75. So I want to see them converting cash into profits consistently. That's number one. And secondly, obviously, interest cover above 3. That's for a large cap stock. A small cap stock, I might look at anything above 5 times. So risk, financial risk is my number one criteria there. On the technical side, I can look at things like cycle analysis. Are we in a bull market, bear market, in correctional rally? Higher highs, higher lows. That's what I refer to as a cycle analysis. Very simple, basic tool I use is moving averages. And I'll show you some slides just now, 50-day and the 200-day moving average. Highlights for you are either bullish trend or bearish trend. And also use simple things called trend lines to help us establish are we in a bull market or bear market. There are various technical indicators you can use. I like to use the MACD or MACD, moving average convergence, divergence. Works well in both markets. Remember, you get a trending market, either trending up or trending down. You also get a sideways market. So I like to use the MACD indicator because it works well in both markets. And then also I want to go with the potential winners. I want to find stocks that are outperforming. So this is where I use the relative strength. To divide $1 stream by another dollar stream, I want to see that trend up. I'm going with the potential winners. So that is my share selection criteria very briefly. And obviously I create a watch list, and from that watch list I dig a bit deeper with other financial ratios, find out what does the company do. So let's get into the top 10. Here's another quote from Susie Orman. Some of you might have heard of Susie Orman. I've got a few of her books. Money you won't need to use at least 7 years is money for investing. The goal here is to have your account grow over time to help you finance a distant goal, such as building a retirement fund or complementing your retirement funds. Since your goal is in the future, money for investing belongs in stocks. So the reason why I put the slide up is obviously we're talking about investing today. And some of you are starting out, and that's how you must have, is that long-term investment perspective. Okay, so these are the stocks in our top 10. This is until the 31st of December. We only really tweak his portfolio maybe once a month, but these are the stocks we're looking at. So Investec, Remgrove, Bidvest, Old Mutual, Togo Sun, Wilson Bailey, MTN, Sasol, Rainet, and Truworths. Because of time constraints, I'm not going to go to every single one of them. But when you get the PDF of the presentation, I've hidden the slides away, but when you get the PDF, you'll be able to see all these other companies I'll be talking to. So I'm only referring to 3 companies today in the top 10 large caps. So, and as I said, we're going to more detail just now regarding sector analysis, but if we were to do an overview of all the different sectors, and this is the approach we've been using, is looking at all the different sectors, and from there chunking in a bit further within those different sectors, which ones will provide the best opportunities. So out of this list, you see most of them are industrial companies. There's 1 or 2. There's Old Mutual, which is an insurance company, and when we look at the small caps, you'll see there's Clientele. So it's mainly industrials and a bit of financial stocks. We don't really consider Sasol a commodity stock. I always look at Sasol as intellectual capital, but a bit more defensive in the sense that the volumes are there. Yes, they are susceptible to the oil price, but it's a different kind of market. Okay, so the ones I want to highlight today, and remember my criteria. Remember, this is a dynamic on our website. These prices on the portfolio will be changing. The worst case scenario, 15-minute delayed, but dynamic, these prices. So I want to highlight, remember my criteria was PEG ratio below 75 and price NAV below 2. So here we're looking at MTN, we're looking at Sasol and Wilson Bailey. So if you had to go into more detail with each of those different companies, all these companies, by the way, these were the interim results. The first 6 months was until June. So December recently would have been the financial year end. So 2-3 months time or 2 months time, you should be expecting the results in the newspaper. So this is maybe an opportunity to start looking at these companies and say anticipating what the results will be like. And to a large extent, it has been discounted already to the share prices. You'll see in the next slide, we look at the graph. So you'll see these prices have fallen. You must maybe position yourself for unexpected surprises. Okay, so we all know what's happening with MTN. They've been in the news lately with that big fine. Let me just get my log finger on MTN. So yes, they got this big fine in Nigeria. They were recently fined 65 billion for not timely disconnecting unregistered SIM cards. The Nigerian court has referred them to arbitration. And the main thing here with MTN is that the share price is likely to benefit from any reduction in that fine. That's number one. But saying that, we are hesitant in rushing out and buy the stock right now because of incomplete information. So once this the court has ruled or arbitration has ruled, I think there might be opportunity. But saying that, here we go. There's the share price. You can see how it's fallen. It's below the red line is the 50-day moving average. The green line is your 200-day moving average. So anything, you can see where the two of them cross. That's what we call the death cross. So anything below that is bad news. Yes, the share price has fallen, but that's why I'm highlighting for you. From a contrarian point of view, it might be an opportunity. This is relative strength. So I'm taking MTN relative to the JC All share. So the trend is also down. So remember my criteria was it must be trending up, it must be outperforming, and oversold. So it's not there yet, but this is the stocks you want to add onto your watch list because this can change very, very quickly. So yes, we are oversold. I believe that we'll be very close to bouncing soon. So I'll be watching very, very close. It's still a good quality company. Yeah, it's growing international markets. And there's this big move towards data and things like that. So I like MTN. I always had MTN in my portfolio. Saying that, the other one is Sasol. I like Sasol. I've always had Sasol in my portfolio too. Sasol, you can say more as a chemical company than an oil company. But the idea here is that it's a good quality company. Yes, it has a bit of exposure to, it has exposure to the oil price. What's in its favor is the weaker rand. Remember, it's selling its petrol here in South Africa, so the volumes are stable, if I had to say that. I like Sasol in the sense that if you look at the share price, by the way, it's quite defensive. Been moving sideways for quite a while. For all of last year, between say 360 and 470 or 480. So that was a range. You can see it's still below its moving averages. I anticipate that these moving averages will cross soon. We'll start making higher lows, higher highs, and from a trend analysis point of view, or cycle analysis, we'll have a change in trend. Rate of strength, so yes, we are. You can see we're moving sideways, so it's market performing. We're moving in line with other markets, and we're also oversold. Another reason why I put that stock, that share in the portfolio. We've seen the oil price hovering around about the $30 a barrel. And one day we're up to 31, next day we're down again. So remember, Iran has just come on board now with their production. There is an oversupply on the markets, yes. So that's also keeping prices down. So these guys have to look at operational efficiencies and cut back there. But that, I believe, is opportunity. And then the last one in this space is Wilson Bailey. Again, you know, the construction sector, all three stocks, by the way, have a cloud over them. The construction sector has been challenged by weak pricing power. There's overcapacity in the industry, poor demand, obviously more on the mining side. But there's been significant restructuring, especially in the civil engineering divisions. A lot of these guys are focusing more of their attention on lower margin building contracts, but also cross-border contracts, and a lot of preference to Australia. Obviously, the margins, you know, are tight, but they're moving more into the order books are looking a bit better. So Wilson Bailey, I like Wilson Bailey in the sense that the PE ratio is below 10. And obviously its earnings on a cyclical low. Yes, we also got this cloud over the construction sector regarding the collusion back to 2010 and all the contracts there. But Wilson Bailey, it's not the cheapest out of all the construction stocks, but it's a quality company. So that's why I like it. I don't, you know, it's on my list, on my portfolio for a long time. Great company. Yeah. So those are my three picks that I want to highlight for you. Remember, the other slides are hidden. Here's the graphs. You can see there we had this little rally recently, but it's about to cross again. So we're still in a bearish trend. So we're trying to get out of this, and again, the idea is to put us onto your watch list and maybe wait for that rebound, but I believe it's will be around the corner very, very soon. Okay, so let's look at our top 10 small cap portfolio. Here's a quote again from Peter Lynch. I think you have to learn that there's a company behind every stock, that there's only one reason why stocks go up. Companies go from doing poorly to doing well, or small companies grow into large companies. So yes, I'm talking about a small cap portfolio. And you'll see one of the stocks in that list, by the way, is a company called ISA. They're listed in the Alt-X. So they might go to main board, and from main board from small caps to mid caps to large caps. And this is the whole idea why you want to be involved in the stock market, because of that growth potential. Okay, so let's go quickly. Sun International, we spoke just now about Tsoga Sun. Sun International, Transpaco, Invicta, African Media Entertainment, Comair, Transcap, Peregrine, Clientele, Life, and Holsport and ISA. Those are the ones that you want to look at in our top portfolio. Again, remember, this is dynamic. This was until Monday. as a snapshot. So the three stocks I highlight again from a valuation point of view: Comair, Invicta, and Transpacker. So if you look at Comair, obviously lower oil prices will benefit them, but obviously they've been knocked with consumers or consumer spending. So people are not traveling as much as they used to with business. They're doing more teleconferencing and Skyping and that kind of stuff. But still a great company. You guys have brought on more fuel-efficient planes. Remember, it's not only involved in the aviation industry, it's more the travel. So it's the car rental as well as hotels and things like that. Here's the share price. Again, as I say, Contrarian. These guys have been knocked. You can see it's a full-on bearish trend here, underperforming. So, yeah, something to look at. Okay. And then the second one, Invicta. Well, Invicta is quite interesting. Obviously, they've got a big exposure to, number one, the mining industry. They have these things called wear, you have wear and tear on the parts, or the mines have wear and tear on parts. So these replacement of those parts, very important part of the business. They still, the mining industry might be slowing down, but there's still activity happening. That's number one. And number two is the exposure to the agricultural sector. They import a lot of tractors and things like that. So farmers might be affected by, or are being affected by the drought. But, they might be not buying new tractors and things like that, but they still be doing repairs and maintenance. So that's where I think a lot of the focus will be on. It's also interesting to see with Invicta. They do import a lot of things. So yes, the rand will have an impact on those parts of the businesses. Remember, these guys are importing in dollars or paying in dollars, so it's important to look at, and that's been reflected in the share price. But I think it's already been discounted. By the way, again, September was the interim results. So end of February will be the year end. So you must say, okay, with the rand and things like that, has this been fully discounted into the share price, or will it be better? So those are the things you want to look at. Transpacker is a packaging company, obviously involved more in the plastic side. What's interesting to note, obviously, their customers, the manufacturing sector. Remember, these guys are packaging, and the manufacturing sector are exporting, so they're taking advantage of the weaker rand. So what's nice for Transpacker, obviously that's how the business will be doing very, very well. I like Transpacker. Only thing about them from a technical point of view, you can see sometimes it's flat lines, so this is a stock that's not really tradable, illiquid. So be careful. There's a risk. So it's not a trading stock, it's more investing. So a bit of a sideways market for a long time. You can see there's a nice support level right about this 18 rand, and we've been as high as 24.50. Bit of a sideways market, but we might pull back. We might go a bit lower, but anticipate a bounce again off that 18 rand. Okay. So guys, I hope you've got some value out of this. That sector review, if I had to do very broadly, people might be looking at the banks. Yes, there are opportunities in the banking sector, and they've been hammered. They're not on our list as such, because remember, we also bring in relative strength. So these guys don't have the momentum right now. FirstRand is the premier stock in that sector. But we prefer the standard banks and net banks. That trade what's at a 1.6 price NAV, or 60% premium to NAV. And also got very good dividend yields. So in the banking space, we like that. Only thing, obviously, a lot of regulation coming around to capital. So that might be impacting on the return on equity, profitability. If you look at other sectors, and the mining sector particularly, I know a lot of you might be looking at resource stocks and thinking, there are a lot of value, but it's all dependent on what's happening with commodity prices. So it all depends on that supply and demand cycle, and obviously growth in China. So the excess supply. So we need to get rid of that excess supply. there are situations where they're cutting back on production and also seeing higher cost production facilities being rationalized. But what's nice is, yes, these guys will be benefiting from a weaker rand, but there's a lot of uncertainty in that space. Hence, we're not looking so much at those resources. If you look at other things like the food producers, the food and drug retailers, the food and drug retailers as such, we feel that there's not much value there. Yes, they are, they traditionally produce relatively high or relatively stable earnings, but it's all depending on the economic cycle. Ones we do like is more the general retailers, more specifically the mass marts. We like that a lot. The relationship with Walmart and obviously expansion into Africa is good for them. Truist, Lewis, Foschini, all those kind of companies, we worried about new credit regulations coming in, again, at uncertainty. So the idea of the sector review is, you can go down by sector and say, looking at the bigger picture, what to look for in a winning stock, what are the drivers, what are the momentum, what's going to chase the momentum. So it's important to develop your own investment philosophy. Okay, but bottom line, you want to look for great quality at a good price, not a good quality at a great price. So, so it's great quality. That's what you want to look for, especially in this volatile market. So, guys, from my side, before we tackle any questions, where's my little? Whoopsie, what's happened there now? There we go. Sorry about that. I lost my thing on the side here to see where you guys are. Okay, let's see. Wow, big questions here. Let's see the questions quickly. So some of you did not hear anything. I can't believe it. Some of you do hear and some of you don't hear. Okay. Where's the rand going to, Malcolm? I don't believe we'll go back to 13 rand. We'll hover around the 16 rand level. I see it has pulled back a bit today, but the trend, the general consensus is weaker rand for this year. Campbell, welcome. You're new to the markets. Well, I hope this presentation helped you. Frankie, I know you're in the market for a while. Rolf, questions on Mr. Price. They have a big cash component, which is good. It gives it a bit of defensive. To answer your question, should you hold or sell? I have to look at the charts. The same with Anglos. Rolf, I have to get back to you. Okay. Let's see other questions. I can hear you. The slides. I'm great you guys can see the slides today. How is today's Federal's Open Market Committee announcement likely to affect the rand? Well, it's going to affect the dollar, so obviously it will affect the rand. That's a question from Warren. How do you choose the best company? I mentioned in one of my slides, having those share selection criteria, and also I always say define best. What do you mean by best? So to all you have to look at what is your definition of best company based on what, relative to what. Where would I find this sort of analysis on your website? Benita, great, good question. Obviously on our new website, you can go click on, there's a little button on the side, click on that and go to research. So under research, from there you'll find our top 10 recommendations. So I hope that will help you there. Company analysis, that's where I'm referring to. So you go to the top 10 portfolio, see there's a link to company analysis. Okay. Your opinion on resources, I think I've answered it already. A lot of uncertainty there. Some of you, a lot of beginners. So welcome, guys. Offshore stocks. I believe you must have exposure to offshore voter. So have some element of offshore, either through Rand stocks or through DBX trackers, or opening up an offshore account. You want to diversify your portfolio geographically. You don't have all your eggs in one basket. Laiza van Merwe regarding Japanese market, where's it going? Again, I have to look at the technicals. I'll have to get back to you on email with that. Harmony Gold. Peter Pretorius. Okay, hi Peter, nice to see you. Recommend to invest yourself or with a broker? Well, it depends on your level of knowledge and experience. I do both. Talk to your long-term portfolio. You might have a portfolio manager managing that for you. Do it yourself. A lot of people on this platform right now, on this webinar, are do-it-yourself investors. So it depends. Depends how much time you got. And I know you got a lot of time, Peter. Will Zeta cycle turn? Again, I'll have to look at the charts offhand. Same with PSG. I have to look at those companies. So, guys, I'll have to get back to you guys on those different stocks. Will there be a physical seminar for beginner traders? Good question, Laza. I think it's Laza. I don't know how to pronounce it, but we got our first seminar of the year coming up next month. Unfortunately, I haven't updated the slides yet. I got one down in Cape Town, and I haven't set up the calendar for the rest of the year yet, but it'll be on our website soon. There's a lot of online tutorials you can go through also to help you choose your first share. So I suggest go through that also. Okay. Currency, what do you expect over the next 12 months? That's a question from Vota. Again, I suggest is my bias is towards rand weakness. So it's if you want to trade currency futures, selling the rand and buying the underlying currencies. So buying the dollar, buying the euro, buying the pound. So it looks like all of them. Okay, thank you. Thanks, Lisa. That's how you pronounce it. I appreciate it. Jan, I left again. You guys ask me all these questions about all these different companies. I'll have to get back to you on email or phone you. PPC, I'll have to haven't looked at that one for a long time. I know there was a bit of a boardroom shake-up last year, and I think that's out of the picture right now. But I'll have to come back to you on that one. Okay, so guys, thank you very much for your support. Any questions you guys have furthermore, here's my email address, there's my contact number. Drop me email. And I also really appreciate if you guys, when I send out the recording, if you guys can just fill out the Survey Monkey, give me some feedback. What did you think of the webinar? What other topics would you like this year? Because that's, I'm there to help you. I'm there to serve you. So you give me the content or the topics, I'll discuss it gladly for you. Okay. But also, lastly, all these stocks that I was highlighting, it's not out there for you to rush out and go buy them. It is more for educational purposes, more to explain the processes behind it. And but bottom line, good luck and happy trading. So enjoy it. But thanks for your support. Until next week, all the best. Keep well. Bye for now.